Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Well, my name is Rob Clayton and thank you for joining me. The Australian dollar came under pressure on Friday after a stronger than expected US non-farm payrolls, which boosted the US dollar and reinforced expectations that the Federal Reserve may keep interest rates higher for longer. According to the US Bureau of Labor Statistics, the non-farm payrolls increased by 172,000 jobs added in May, while the unemployment rate remained unchanged at 4.3%. Attention now turns to this Wednesday's US CPI report, with headlines expected to accelerate to 4.2% from 3.8%, while the core CPI is forecasted to edge up to 2.9%. Technically, though, the market has buckled, but nearly achieving its objective, which was where I was calling somewhere around 70, 35, 45. Having reached this target, let's see if the market can improve from this level around 70, 35, or are we looking for a deeper fall, which could see stop losses triggered to around 69.5. Technically, the ADX is supporting the bear case, but we are a little bit oversold. But nevertheless, the MACD is still negative. Turning to the euro, all eyes will be on the ECB's rate decision this week, with an expected 25 base point rate hike. If so, all eyes will be on President Lagarde's guidance following the announcement. Turning to the technicals, though, we are still buckled and still holding to a bear case. So therefore, let's see if we can push lower. But we have reached the target of 115.0515. But if we see further stops, then we could see a move down to 114.5 and reassess, just in case we do get that recovery. Turning to dollar yen, the market still continues to push higher, but treading very carefully as it is showing some sign of exhaustion, and along with that, intervention risk is still very high. As last time we got to this region, the market saw a very heavy candle and a hell of a lot of stop losses. So no doubt we may see this again very soon. As I say, technicals have buckled. The ADX is overheating, so let's see if the market can fall lower. Sterling, well, the market reached its downside objective around 133.2540, but not quite getting out of the bearish case as of yet. We may see another downward challenge, and let's see if we do see a bounce from this region or a further stop loss down to 132.5. Finishing off with commodities, inside this pattern formation, the market is still holding to a somewhat bearish case, with the ADX supporting the negativity. Therefore, we could see a move lower towards the region of 4,270, then the correction back towards the top side of the range around 4,450. A little bit weaker when it comes to oil into the fourth consecutive day, and maybe even finding a little bit more to the start of this week. But towards the bottom side of the range, around $84 a barrel, could see a bounce and look back towards 96 to 98. Well, that's a wrap. Thank you for joining me. As always, look out for the interest report. Hope you enjoy the great start to the day.